What's happening, boys? We are back with another video. I hope we are all doing good today, and I really want to do this recap for two main things. So first is to show you how the risk management works, so you can get your psychology off of the money and more focuses on the strategy itself. Because if you're always focusing on the money and you're always trying to get money, if you're trying to rush the money will run away from you. It's like chasing a butterfly. If you chase the butterfly is going to run away. If you build the garden, if you build the discipline, the butterfly will come and you will attract the butterfly. So that's really what I want to talk about today, is really just building that garden to be able to attract the winds instead of trying to chase the winds. So I have a very, very good recap today. And this recap today is about how good psychology can still make you lose trades. But it's not the good psychology that made you lose. It's actually just the market. Some days you're going to lose, some days you're going to win. You cannot win all of them. And that's one thing I really need to stress, because you can't just trust me, I know by experience, you can't just jump into the market and expect to win every day. And just because you just because you lost doesn't mean you're doing something wrong in that moment. So remember, the checklist should go by. Was I disciplined? Did I follow my rules? Yes, then sweet. No, then let's adjust it so we don't do it again. So in this recap that I'm about to show you guys, this trade was an A+ setup for my strategy. I really liked it. I had good risk management. I was calm going into the trade, and it just didn't play out. We took a loss of 1.36k AUD, as you can see on the screen right over here. But I'm gonna tell you guys right now, just because we lost this trade does not mean we're gonna lose tomorrow. Does not mean we're gonna lose the day after. Who knows? We might lose, but that is not the point. The point is that I followed all of my steps and I followed all of my rules, and just because I lost does not mean I got emotional over it. I'm actually very happy that I lost, because I'm proud of myself for losing and not overtrading, losing, but I lost by sticking inside of my rules. Now, if I won the trade, but my psychology was bad, and I didn't really understand the setup, and I kind of forced the trade, and I was thinking about how much money I gotta get if I hit my take profit, then is that really a win just because you made some money? No, it's only a win if you actually follow the requirements to becoming a profitable trader. Remember, trading isn't about the money. The market doesn't give a fuck. The market doesn't give a fuck about it. It doesn't care what you think. It doesn't care about your emotions towards money. It doesn't care if you need to make money today to pay your rent. It doesn't give a fuck. That's the last thing that it cares about. So, anyways, enough fucking talking. Let's just get into this replay. Let's do this. So, boom, replay. I'm going to quickly pull up my trading view chart over here so you guys can have a quick see. Let me move my fucking face out the way as well. Bang. Cool. So, this is what happened last night. We took a NASDAQ trade. Market opened right here. We push all the way up, and we have a 15-minute BPR, and we came all the way back down. For my strategy, I learned from Vito Commerci. We do philosophy trading, so we trade momentum. This is a very good confluence, because if it makes this candle, there's a big chance if it wants to go down this session, it will go down once this candle lands. This candle lands, very, very bearish candle, but price still manages to come all the way back up and give another push. So, having this confluence, plus all my normal confluences, plus having this 15-minute fair value gap right here, everything lined up. It was perfect trade. It was an A+ setup. So I took the trade. As you can see, it gradually came up until maybe around 40 to 50%, and then it came back down and stopped me out. Did I do anything wrong? Not that I know of. Could I have improved anything else? Not that I know of. Yes, I can continue looking back at the trade. Maybe I can find some things that I could have tweaked to maybe avoiding this loss. But at this current point, from my journaling and my perspective, I did everything correct. Now, let's go over back to TradeZella. Also, TradeZella is a very good tracking platform if you want something to track your trades with. And I wrote down some notes. So let's have a look at these notes right here. All right. How the fuck do I see it? View notes. Boom. Cool. Can I full screen that? Yeah. All right, cool. So it was an A+ setup because I preach to myself. Take only A+ setups. What's the point if you have an okay setup and you take the okay setup when you could just wait till tomorrow and then have an even better setup, and it's more probable that you're going to make money instead of lose money? Doesn't that just make a little bit more sense? So wait for A+ setup. That is such a main thing, and trust me, all this advice that I'm trying to spread into these YouTube videos, it's because I've made the mistake before. I've made the mistake of taking a shit setup that I didn't understand. So that's why I'm just telling you guys, please just take the A+ setup. Do you really want the money? Are you really going to become a disciplined trader? Just be disciplined. It's not that hard to follow a fucking few rules. Okay, stock, traded NASDAQ, cool. Trade. Okay, so my strategy consists of a push, retrace, second push. But we've got a little bit more than that. So we're going to push into a 15-minute fair value gap. That's number one. Confluence number two, very big retrace. Bigger the retrace, the better. Number three, we flipped the candle. Okay, we flipped the candle. Now get this. The flip of the candle was 93 points. That is a massive, massive retrace. Massive flip. So 5-minute candle closed, like we shown before. It was a 2-minute retrace, and then we finally got our second push. Now, price pushed up to 40% into profit, then reversed, stopped out. The market speed was okay. Now, the market wasn't moving extremely volatile, but since we had such a huge confluence, having the wick being so long, and then we're getting a second push above that wick, that was enough for me to get in, even though it wasn't moving crazy fast, but it was moving crazy consistent. Now, with my strategy, I'm not talking for everyone's strategy, consistent is better than fast, because we're here to make money, right? So if it's moving consistent and it's following the rules, there's nothing wrong with taking a trade from that, right? Cool. So I just wrote a little note here, 65% to 100% in profit equals auto break even. Cool, but it only went 40%. That's why we did not break even on this trade, and that's why we lost money. Cool. So confluence level. We had 6 confluences out of 3. Remember, we only need 3 confluences, and in this case, we had 6. We had double the amount of confluences that we need for a normal trade. So, the level strength, which if you guys don't know what my levels are, it's just where prices reacted heaps in the past. You can call it support and resistance if you like, or you can call it supply and demand if you like. I call it levels. I prefer levels. My mentor also calls it levels as well. So as you guys can see, we've got highs over here, highs here for the low one, lows here, highs here. Go back and past, comes up, boom, comes down, nearly touches it here, boom, comes up, hits it, comes down, hits it again, right? So pretty strong level in my opinion. I give it a 7.5, and great levels, you know what I mean? Anything really above a 5 out of 10 levels are fucking all good to trade. I am now, since I'm only trading A+ setups, if I open the charts in the morning and the levels are shit, I just turn off my computer, go back to bed. What's the point? You may as well wait for some good price action, you know? Cool. Stop loss was at the level. Take profit at minor liquidity. So it was a market loss. This is the most important thing. It was a market loss, but it was a psychology win. So if you lose because it was bad price action, it honestly does not matter. It does not matter if the money is in red. It only matters if your psychology is in green. That's what truly matters. If your psychology is in red, but your market is a win, then that is just pure gambling and you don't know what you were doing. Okay? So, this is a very important video. Another thing I did want to mention was the risk management side of things. So, let me try to make this as simple as possible. Okay? So this really helped me because I really want to get rich. And since I really want to get rich and I really want to quit my job, I sometimes focus on the money, just being 110% transparent. I sometimes focus on the money and I trade a little bit bad. So that's why I look at it as a way, not saying, oh, I wish I didn't trade bad. I look at it in a sense of, okay, it's 11:11 by the way. I look at it in a way, okay, I'm focused on the money. Why? Because of X. X could be working at the job, but I don't like my job, so I want to leave, right? Or it could be Y, because, you know, the people around me, I want to spend more time with them, but I can't because I'm always working. Funny, that kind of ties back to the job again. But just for an example, let's use the job. So I focus on the money. I really want to make the money now. So if I have one funded account, I would risk $700 to $1,000. Now, you only need $2,000 lost to blow the account. And 2 trades, I would have blown my account. So I would already be halfway to blowing my account, right? If I have one account, and since I want money, I would trade, let's say, for an example, $1,000. I'm risking basically half the account, and it could be gone. But if I have 3 accounts, and I risk $350 on each account, I'm still risking the same $1,000, but I'm actually only risking $350 because it's across 3 accounts, if you understand what I mean. You know what I mean? So I can get a much better return once those accounts are all passed, and I don't have to worry about the stress of, am I going to blow the account in 2 trades? No, because I can build a really good buffer on it, and I can work hard to stay consistent on that account and grow it over time instead of trying to fucking flip the account in a couple days, right? So I'm going to leave it at that, boys. I think this was a very educational video. If you guys did find this useful, please leave a comment down below letting me know you did find it useful. And again, I just wanted to show you guys the big take on, remember, if you lose, sometimes it's not your fault, sometimes it's just the market. But if you lose and it is your fault, then you just have to learn why it is your fault and journal is a big thing, and then make sure it does not happen again. So that's all for today, boys. I hope you guys enjoyed. Oh, I still have a little bit of coffee. Yeah, I hope you guys enjoyed, and we'll be seeing you guys soon. Hopefully, on the next video, when I see you boys next, I'll be able to go over here, click on this, go to my dashboard, and we see some more green here, some more green here, because this is the first trade I've taken on this account. Well, I don't know, I think this was a test, but first trade I've taken on this account, because yesterday I did not trade because no setup. So what do I do with no setup? I don't trade. I'm preaching to be a disciplined trader, because if you try to chase it, it's only going to fly away. Anyways, boys, I'll catch you guys next one. Oh, peace. Shee.